Hi everyone, welcome to my channel Finance with Maksud Rahman, and today the lecture is on relative valuation, and it is one of the most important tool analyst has been using to do the valuation of the financial modeling. And if I'm not wrong, this is the sixth part of our financial modeling. So let's jump on the topic. So what is relative valuation? Relative valuation is a method for determining a company's value by comparing it to similar companies or market indexes. So it's also known as comparable analysis, COPCO, or peer valuation. Relative valuation is based on the idea that companies with similar characteristics are priced similarly in the market. Investors use relative valuation to make decisions about asset allocation and spot pricing anomalies. So basically, relative valuation is a technique where investor or the analyst do the peer analysis and the industry analysis and get the price of a particular stock. So this is the summary what they are trying to define on the definition, and based on that, analyst and investor allocate the asset on their portfolio. So what is the percentage of a particular stock would be in the portfolio, they try to identify within this, and obviously they have some predetermined technique to do that. Anyways, so moving on. Method to do relative valuation: enterprise value to revenue, enterprise value to EBITDA, and P/E ratio. So I'm going to use three of the technique to do the relative valuation. So these three technique I'm going to use: enterprise value to revenue, enterprise value to EBITDA, and PE ratio. So what is the purpose of the relative valuation? The main purpose of the relative valuation is to identify whether the share is overvalued or undervalued. So using the relative valuation, we'll get a price, and we are going to command our Excel that is the price is equal to or the more than or the less than the actual price which is currently running on the market, and based on that we are going to get our indicator is the stock is overvalued or undervalued. If it is undervalued, which recommend, not I'm saying, which recommend that to buy the share, which give you a long signal and go long signal. And if it give you, oh sorry, my bad, if it give us the overvalued signal, which is obviously goes with the short position, or like to sell the share to adjust the portfolio. So this is all up to you, not my opinion whether to buy or sell the share, but you can analyze if the share is undervalued or overvalued using this relative valuation method. And this is my purpose to make this video and give you the lecture. So let's jump on the Excel file and see how the relative valuation has been done so far. Well, the first thing we need to do is to download the data. So as we are going to dealing with multiple companies, so it would be better we download the data from a screener. So we can use this website named screener.in, and basically this is an Indian website from where we can download the data of the Indian companies. So I'm just showing you, I have already downloaded the data, but I'm just showing you the method using which you can download the data from this website. So if you just click on this edit column, and then you just put your filter whatever like data you need to do your analysis. So here I have put 1 2 3 4 5 6 7 8 different line of data. I'm just showing you how you can do. Just put net profit, and then it would be added on a column. just save the column, and the data would be organized in a way, the way you put the command. And here you go. So you just simply just select it and copy it, and then you have to go to your Excel file and just paste it here. So the data would be here, and you can sort out the data whatever you want to do according to your demand, and then work on the data you have downloaded. So these data I have already downloaded previously and sorted out the data already. The reason to do that is to save time, and I have already like put the format on my worksheet, like that, put the label and the other thing to make the video a bit shorter, so we'll have like much more time to do our analysis rather than, like, downloading and sorting out the data. So I just simply cut this data, the one I have downloaded now, and delete the sheet. So here you can see I have the data sheet in which I'm going to do my relative analysis of these companies, pharmaceutical 10 companies I have taken. So I've just simply select the price and just double click it to put the price here, and I'm going to do the same for the number of the equity share as well. It's quite easy if you organize the data and the cell beforehand. And then I'm to get the equity value, I'm going to simply multiply the share price with the outstanding share, and then double click it to get the equity value for these 10 pharmaceutical companies. And I'm just looking to get the currency of the Indian rupees so that it would be sorted, look better, professional. um, just looking, there are lots of currencies, it's really hard to find, and there is no search button where I can write it. Okay, let me do my analysis first. I'll come back here and do this one later on. And then the next part is net debt. Net debt should be the debt minus the cash in hand. So net debt would be debt minus the cash in hand. Yeah, that's correct. And double click it, and everything here on this sheet are in crores. Crores means like 10 million. So every amount are given on this sheet are 10 million. So 1 is 10 for 10 million here. And then the last thing for this part, we have to get the enterprise value. Enterprise value should be the equity value plus the amount of net debt we have, and finally simply double click it and get our result for the 10 pharmaceutical companies. And then we come down to revenue, EBITDA, and net profit. So we already download the data from the screener.in, so we can simply just follow our other data sheet and put the files data, my bad, put the data on this sheet to make it workable. And we're going to do the same for EBITDA. Just double click it or drag it, should be fine. And then the net profit comes. Just take the first cell of the net profit and then just copy and paste the formula to the end. Yeah, that's right. Now we are going to do our enterprise value divided by the revenue. This is one of the metric we're going to use to get our relative valuation, do our analysis, and just drag it to the end. So here we got 4.31 for the first and for 2.45 for the last one, and we are going to do the same for the enterprise value divided by earning before interest, tax, debt, and depreciation and amortization, which stands against EBITDA. And then finally we're going to do the PE ratio. PE ratio should be the equity value divided by the net profit. So it stands like how much money you need to spend to get $1 of profit, 1 rupees of profit. As we're doing on Indian currency, so it's better to mention on rupees rather than going for the dollar. And then we're going to get some other metrics such as high. So I'm just asking the Excel the highest number on this row and follow up for the other 3 metric as well, the EV divided by EBITDA and the PE. And then 75 percentile. So 75 percentile is a measurement, so like it will give us the like third quarter of the total measurement, what is the amount. It's one of the good metric, so I'm just doing it to show you. It's not necessary for our analysis right now, but just doing it. And Excel already got the function, you don't need to put the formula manually, so it would be quite easy. So I just thought to just put it on my cell, on my sheet, sorry, my bad. And then the average, median, we got the built-in formula on Excel. So average from this row, from this column, and then just drag it to the other 2 rows. And then the median one, same thing we will be doing for the 25 percentile. So for the 25 percentile we're going to take the metric as 1 rather than 3, because one is 10 for the 25 percentile, which give us the value of 3.65 times. So everything I'm mentioning here on like number of times, that's why I put a x to the end. And for the low ones we're going to just simply going to use the minimum formula, the minimum, and just select the file, select the column, and let's drag it to the other 2 rows. So here you go, here you got our metric and the EBITDA, EV divided by revenue, EV divided by EBITDA, and PE. And we're just going to take the median one, so I just bold the median and this is the industry median, and now I'm going to do the relative valuation of the MQ Pharma. So I'm just going to take the median and going to analyze the implied enterprise value, get the implied enterprise value. So it would be simply the median multiply by the enterprise value, and same thing would happen for the median and the EBITDA of the MQ Pharma. I just need to put the name, relative valuation of MQ Pharma, so it would be easier to understand on which company we are doing our relative analysis. So depth would be same for the all the three of this metric. So I'm just putting the same depth, and then we are going to do the implied market value. So implied market value would be simply the implied enterprise value minus the depth. For the PE ratio metric, we are going to get the implied market value first. So to do that, we are going to simply take the median and then multiply this with the net profit of the MQ Pharma, and then to get the implied enterprise value we just simply add these two, the depth and the market value implied. Now we are left with the number of share outstanding, so which remained same for all of these three metric. So just put simply equal sign and then take the number of share for the MQ Pharma. Just copy or just put it equal sign. Oh, so just I think I need to do it individually. And then the implied value per share should be the share outstanding would be divided by the implied market value, which gave us 1848 for EV divided by the revenue metric and 1837 for the EV divided by the um, EBITDA, and P for the P 1178. So we're going to see if the price is overvalued or undervalued. So to do this I'm just doing the if formula. So if I'm just putting the command if 1848, the result we got from EV divided by the revenue, is higher than the actual market price, which is 1465. So I'm just putting the command, then I'll put undervalued, and if not, then I'm just commanding the Excel to give me the sign of overvalued, and then finally put enter. So it's showing me that it is undervalued, because we can see here 1848 obviously higher than 1465, and after dragging it, it is showing me that 1837 for the next metric it is also showing undervalued, but for the 1178 which we have got from the PE ratio is showing us overvalued. So I'm just putting a bit orange sign on that, and for the other two I'm just putting a green sign. So green sign means it's a buy signal as it is undervalued, and for the orange sign showing me the red signal which means sell sign. So I just here what I have done, I just put the command. So in this way I can do the same for the other two. So just let me put the currency first here. So I'm just look for the Indian rupees here. Mm -mm -mm. I think yeah, India English should be, I think. Mm, yeah, just put OK sign. Yeah, it looks better now. Yeah, just simply copy the format and just paste it special, just the formatting it should be. Yeah, formatting. So this is it, just copy paste the formula, the format. So I think we are quite done with the part. So what I was saying, so the way we have analyzed the MQ Pharma one, we can do it for the other 10 companies as well, and we can see if these shares are overvalued or undervalued, and based on that we can like get the signal, like, and do our analysis. And I'm and what I'm saying is that I'm just recommending here. I'm just not saying if the share is undervalued you should buy it, or if it is overvalued you should sell it. It is just analysis. So you will make your decision based on your own analysis and your judgment. So this is my judgment, and I'm not saying that you trust my judgment. I'm just showing you the method in which you can go to your judgment. So that's it for this